very, very important to see how markets react. These companies make up a huge part of the S&P 500, and if they perform well, the markets inevitably are going to perform well because it's a sign of what's been going on. So Wall Street will face one of its busiest weeks of the year, really is, and I'm going to be very prepared, let's say, in terms of my trading. Make sure you're subscribed to the channel so you know exactly what I'm doing. By the way, if you haven't smashed the like button already, make sure you do like the video as well, as always. So what I'm looking at right now for the Bitcoin price, I just want to go back to that article in a moment, is this key level we're trading at now. We're going to go into the technical shortly, but just to kind of brush up on what we're looking at here in terms of this week, I think this was probably the best article that I found from Yahoo, actually. So yeah, Wall Street will face one of its busiest weeks with earnings from big tech leaders, the Fed Reserve meeting and rate decision 2023. The S&P 500's most heavily weighed components, Google, Apple, and Amazon, as well as Facebook, Meta, are among important players scheduled to report fourth quarter financial results. So they're reporting on how they did in October, November, December last year. And of course, this is all playing into the fact of where the economy's at. I mean, you might argue that these are some of the most profitable, obviously innovative tech companies there are. So, you know, maybe not as crucial as some of the other more hardy long-term dividend kind of growth stocks. But anyway, these make up a huge proportion, of course, of the S&P 500. So meanwhile, in Washington, D.C., Fed officials will meet between the 31st and the 1st. They're expected to raise interest rates by just 0.25% or 25 basis points in Wednesday's meeting. And that is what has been, let's say, baked into the cake. That's what the markets are expecting. If we do get 25 basis points, markets should act positively. Anything higher than that is going to be extremely bearish, and we may see markets crash. We will be talking about the S&P 500 in a moment, as well as the dollar. So I've got you all covered in this on this show, guys. So a press conference held by Fed Chair Jerome Powell, Papa Powell, as some call him. They used to call him Papa Powell, money printer Powell, but that hasn't been the case because they've been monetary tightening for the best part of 12 months. Now, investors, crucial signs regarding the central bank's forward on rate increases. Finally, rounding on the week on Friday morning will be the government's January jobs report. So that's really going to be important to see what the job numbers are in terms of unemployment. Unemployment at the moment is incredibly low, and this is why it's been so hard to pinpoint that we're actually right now in a recession. Normally, when you have a recession, you do have job losses as well. So maybe that will come later in the year. Stocks have been on a tear since the start of the year, as I'll show you in the charts in a minute, and what to expect from that. Investors are betting on weakening economic data will prompt the Federal Reserve to end its rate hike cycle. So they've been raising rates prior to the last rate hike, by the way, which was 50 basis points. They had been raising rates, I think it was 75 basis points in a row. Was it 4? Maybe you guys can let me know in the comments down below in the chat. I think it was 3 in a row. I could be wrong. But they have now started to, let's say, set the course for disinflation. They're not pivoting yet, but they are decreasing the rate of increase. So we had 75, then we had 50, and now we're expecting 25 basis points. The S&P 500 notched a weekly gain of about 2.5%. The Dow Jones is up, and yeah, pretty much all markets are up. So that's enough on that. We can see, like I showed you, fear and greed index is back above neutral, which of course is really bullish to see. Stocks closing higher on Friday, 4th week of gain. So let's look at the charts. Let's get into it and let's see what's going on here, guys. By the way, just a quick mention, if you're not following me on Twitter, do take a moment to follow me on Twitter at Marzell Trading. Currently, the pinned tweet, you can actually win 1 whole Ethereum. I'm going to be giving 1 Ethereum at 10 p.m. UK time on January the 1st to a follower that simply goes and likes this tweet, quote retweets it, and joins our free Telegram Trade Signals channel. That's where I post a lot of analysis and a lot of trades, so there's plenty of value in there as well. Right, let's kick things off with the Bitcoin price. Always a good place to start, in my opinion, before we move our way on to the Ethereum price. Then we'll be looking at some very interesting charts that show the Bitcoin dominance. And we'll be looking at the altcoins as well, which is the total 1, 2, and 3, basically showing the market, the whole crypto market, excluding Bitcoin and excluding Bitcoin and Ethereum, to see if there's any room for altcoins to grow at the moment. And then we're going to be looking at the S&P 500. In fact, let's very briefly start this off with the key macro data, which is the S&P 500 and the 𝗕𝗬𝗕𝗓. It's a good place, in my opinion, to start to know how we're set up for, because if the S&P 500 rallies, the Dow rally, it's a big clue as to what's going to happen in crypto markets, guys. So this is the S&P 500 chart. As you can see, from the 3rd of January of 2022, so nearly 13 months, this trend has been down. Lower highs, lower lows, and in terms of the percentage, we did come down as much as 27. A correction, not really a recession. A recession is normally considered 25 to 45%. And I know it went over 25%, but we bounced off that level. So for me, this is a correction. Is there still a bigger recession and a bigger dip to come? Maybe, you say, or maybe not. You can see we've broken the trend for the first time in a year. We broke out of that trend, right? We broke out of this resistance line, and you can see that we've bounced off these critical support levels. But may I add that this isn't a convincing breakout, not yet. Although there are some, like if you look at it on the daily, for example, we have had several break aboves, but we haven't broken this previous high. And actually, if you go back into the previous time frame, the 3-daily chart, if you look at this parallel channel I've drawn out, or I did have drawn out, and I just deleted it. Let's try Control-Z. There we go. You can bring that into play, and you can see that this is actually the levels of interest that I'm looking at. We need to break, in my opinion, 4,100 on the S&P 500, or $4,100, whatever you want to call it. Unless we break out of that, I'm remaining cautious. Largely down to what happens on February the 1st with the interest rate decision, of course. 25 basis points may take us above that. Just expect volatility on interest rate decision day. Very, very crucial that you're very careful on the trading. And that means if you're using leverage, guys, go very easy on the leverage, particularly on those days. Always manage risk, money management correctly. Guys, but down below, by the way, if you do want a great trading platform, in my opinion, it is the best crypto trade. You can see I'm ByBitted out everywhere. It's the platform that I used to trade. In the link down below, up to 30 grand in USDT bonuses. A lot of people have been asking me, can you actually get those bonuses? You can actually get those bonuses. You need to sign up with the link down below. You need to deposit at least $200 at the moment. That's the rules. And you need to submit your first trade. Once you've done that, you go to the reward center and you can start claiming bonuses. You don't just get 30 grand for depositing $200. It's on a tiered system. It's on a bracket, and it changes. But in the rewards hub, in the terms of the rewards of the bonuses, everything is there. There's a bonus for every balance, if you like. But besides all the bonuses and all that, you actually get 50% discounted fees forever using that link. And overall, Bybit is a great crypto trading platform. 0 fees on spot. You've got copy trading, and you've got this finance option. You can get crypto loan as well. Links in the video description for my tutorials. And yeah, that's enough about Bybit, but that's where I trade on. So yeah, let's talk about, just before we go into the Bitcoin price, just finish up on the S&P 500. The question, of course, right now is, do we continue this rally that we've been on since the 18th of October, where we've rallied in terms of percentage about 17%? Or is this the local top and we've got a huge downward move that is going to take us to the downside, potentially all the way back to that support level, or 14% move to the down? Maybe we simply come back and tag this previous resistance as support, which is going to be somewhere around $3,950 to $4,000. Or, of course, the question is, do we break out and do we rally? Well, watch out for February the 1st. The proof is going to be in the pudding. But like I said, although we've broken out of this resistance, until we break this range, I'm not too convinced. Yes, we have a bullish cup and handle pattern, and that would take you at least to my next bullish target. So let's talk about these targets on the S&P 500. The first target is mapped out, as you can see. It's 4275, 4275, 4,275 points. If we break above that level, I'm then targeting up at 4,500 points. Do we break above that level? I'm not so sure. Let's not forget the macro picture, okay? We are still in a rate hike cycle. Interest rates are still what they are. Inflation is still what it is. And remember that Jerome Powell has been pretty clear that he's targeting 2 to 4%. That's the interest rate. We're still somewhere around 6, 7. And yeah, of course, there's a great amount of debt in the economy. So it's very hard for them to raise much further. But even though they may not be doing the 75 point, even they might not be doing the 50 basis point rate hikes, they could continue with 25 basis point hikes for a good few months and maybe start increasing it again to 50 basis points, which would send the market, in my opinion, much lower. And you'd probably see something like this. We might get a little breakout. We might reach that level, but we could do something where, and I saw someone talking about this the other day, although we've broken this resistance, it's not the most convincing chart. You've probably seen it before. You've probably tried to trade the breakout, and sometimes you see something like this, and then eventually you fall into it and you have this bigger crash. It could happen. I don't want to be like a bear or anything, but you know, if this is going to be a big recession year, we're not going to be done at a 25% drop. No way. Anyway, let's look at the Bitcoin price. Let's look at the key levels to watch, to trade. Should you be buying right now? Should you be shorting? Let's talk about this, and we'll start on the bigger time frames, make our way down to the smaller time frames to see what's likely to happen the next 24 hours, the next 48 hours. The other thing, guys, just before I go into this, if you're not biggest fan of Bybit for whatever reason and you like altcoins, I do recommend BitGet. BitGet's another great trading platform. Link in the description for BitGet down below. You'll get up to $5,000 bonus using that link. These are both platforms that I use, recommend, and yeah, you're going to have no issues with them. Both have proof of reserves, most importantly. Always use a trusted crypto trading platform. Both these platforms you can trade leverage, so be very careful. Watch my beginner tutorials in the description down below if you want to try out trading. Don't just go in and YOLO it, because you're going to get yourself wrecked, guys. Be careful. Right, let's talk about the bigger time frames. The bigger time frames for Bitcoin. First of all, we've got the monthly levels. Okay, these are the monthly levels, the key month levels. For anybody that doesn't know what a key price level is, and in this instance, I'm looking at monthly, you're basically looking where a candle body, so not the wick bit, the candle body meets support and resistance. So this, you might be thinking, why is that not a key level? Well, the month isn't finished yet. There's 2 days left. So it will be. I don't think we're going to break below $16,500 in the next couple of days. Maybe you do. Let me know in the chat. But probably not. Hopefully not. So what we're currently seeing in terms of resistance, yes, we have a key level marked out, and that level is $23,500. That is where our key resistance is right now. It's a monthly level. Beyond that, we don't have resistance in Bitcoin up until $45,270. So wishful thinking to think we're going to get there any time soon. So that's the monthly level. If we look at the weekly level, we do have a weekly level slightly higher, and you can see we almost wick to that level. The week, and I'll put it on the weekly chart so it makes a bit more sense. You can see there the weekly level is at $23,350. So a lot of resistance above us now, and that isn't the only resistance we're playing with right now. The other key resistance level I will bring your attention to is this one. Not a lot of people are talking about this. A lot of people talk about the 200-day, but has anyone been looking at the 200-week? This is the 200-week moving average, and yes, I would agree. In the long term, a beautiful time to buy Bitcoin. Whenever it's been blue, particularly dark blue, it's been a beautiful time to buy. But we are actually currently below the 200-week moving average. Until we break that level, you can't really consider much of a run. Yeah, this is very much, in my opinion, a bear market rally until proven otherwise. So that's the 200-week moving average. We've got some major trend lines. We'll have a look at these on the weekly. So I know it's all a bit liney at the moment. There's a lot of lines going on, but just to explain. So this dark, bold white line, this is the bear market resistance. We actually broke above that last week, and that's beautiful to see. However, the volume, definitely nothing to write home about. I mean, to put things into perspective, this big volume candle here, much bigger, much bigger. This is very low volume, again, making me think that this is a bit of a fake out. So I'm being very, very cautious. So that's the major trend levels. In terms of parallel channels, yeah, we are seeing the resistance at 25,000. Support is down at 15,000, and we have a more local channel. So I can get rid of that one, bring in the more local channel. That's a very local channel. We'll have a look at the 4-hour chart in a minute. I just want to focus a bit more on the kind of macro. We have a log chart here. How do you say it, by the way, guys? Like, I am dyslexic. Is it logarithmic? Logarithmic? Let me know in the chat. Let me know in the comment. I can never say it, and people always pull me up on it. But the truth is, guys, I am dyslexic. I struggle to say words like that. But this is the log chart. I just say log. This is the chart that's been in place since 2011. And you can see that these lines have held up true in terms of ultimate support, the white line, and more general support. What is interesting to see is, yes, we broke that level, and we're coming back up to retest that support line that's acting as resistance. So, yeah, we could track it up, and we could track it all the way up to 25,000, even 29,000. I think what's crucial to see in terms of the levels we really need to break in terms of becoming really bullish again. I mean, really, guys, we do need to break these levels, right? We need to, first of all, break this level here, which is at the bare minimum, bare minimum, 25K. But the real level for me is this level here. This is really where we went into bear market territory, this 30K level. And above that, you've got this 50K level. So basically, I think if I remember rightly, you could draw it like that. I mean, whatever way you draw it, it's 50 grand. Probably makes more sense like that. You can draw it any way you want. There's many different support and resistance levels, but we need to break back above sort of $50,000 before you can start getting really bullish again. And you can see that on the log chart. We are on track. There's nothing. I mean, I've been in crypto for 6 years now, guys. I don't know how long you guys have been here. Let me know in the chat. As always, I'm interested to know who's been here the longest and, you know, your experience and so forth. But nothing's unusual here. I mean, look, let's look at the last top. And by the way, I am going to go into Ethereum in a moment. I'm going to be talking about altcoins, S&P 500. And the Ethereum to Bitcoin ratio, some very interesting stuff I want to show you coming up. And by the way, guys, if you haven't already, do smash that like, get these likes up. It really helps this video get sent out to more people. I'm going to be doing more live streaming and these type of videos, so I hope you can join me for more. Make sure you're subscribed, have the bell turned on. What we're currently seeing, what we saw from the last cycle top, where we had 19,900. This peaked in December 2017. We saw that it took, in percentage-wise, 84% to the downside. In comparison, for those of you that haven't done this, or as a reminder if you have, we've only come down 77%, so not really quite the same, but still could be a bottom. But in terms of the time, if you look at the top to the bottom, you could say in terms of days, it was 364 days. And in terms of time, from the top to the bottom, 364 days. It's identical. I mean, it's uncanny how similar it is. Really, really strange. The other thing is, in terms of the time it took from the bottom to the top, well, we know bull markets last about 3 years. This lasted 1,057 days, so a bit more than about three years. So we can expect to reach the top, if we go by 1,000 days, not until I'm trying to see this. 1,000 days takes you somewhere in the region of about $330,000 And in terms of an increase, about 1,700%. The last bottom to the top in terms of percentage was 2,200%. Okay, so yeah, reasonable to say that could happen. Right, let's go into the small time frames for Bitcoin to look at what's going on this week. And then we're going to focus on Ethereum and some other really cool things as well. So let's zoom in here. Let's get rid of this log chart. Zoom in a bit further and let's see where we are. So we've got some trend lines to work with. We've got this parallel channel, we've got this trend line, we've got this trend line. Now, again, like I was saying before about, you know, having this kind of fake out, we may have had a fake out to the downside here because there was no volume, even though we did break this support level. So for me, that's not really an accurate support. And I would be resetting this to potentially go like this because the other one just didn't make sense. It seems like it's still in the support. So we still might be expecting a big rally to the upside. 25,000 is my next key level of interest. Well, 24.5 to $25,500, just to make that clear. Now, on the local scale, on this 4-hour chart, we are actually we have potentially broken out of this range. As you can see, you could potentially take it higher though, but it's hard. It's a small time frame, so it's not going to be too accurate either way you do it. The target out of this range, I mean, you can't really draw it any other way, to be quite honest. We are targeting about 24,500, which married up very, very nicely with these key levels I was talking about. Was it the weekly? Yeah, the weekly level. So that's my next price target for Bitcoin. There's no harm right here, especially if you have this support and you have this support. There is absolutely no harm here from a risk to reward ratio. This is a beautiful trade. Not to say that this will happen, but the risk to reward is fantastic. So you could set your entry currently where we are now. You could set your stop loss somewhere in the region of 23.1, about 23,100. And you could start taking profits at about $24,500. But ultimately, you could take this up higher, maybe to 25,000. And then there are other key levels above it. And your risk to reward ratio is beautiful. It's a great trade, in my opinion. Once again, guys, if you do want to trade, buy Bit down below, Bit down below, huge bonuses when you sign up there. So check that out. Right, that's Bitcoin on the short-term time frame. Another quick thing to look at before I go into the Ethereum chart is if we do it on the 12-hour, you can see that we are very much sort of forming this W. We had kind of had this cup and handle pattern, as you can see as well. There's a lot of bullish momentum. We broke out many different local scales. So I'm feeling quite bullish about Bitcoin, and I am expecting the market to continue to rally, potentially up to this major level. But yeah, we'll see what happens February the 1st with the interest rate decision. But there's no reason why we can't come up within the next few weeks, few months to $30,000. Do you agree, guys? Let me know in the comments. Right, let's take a look at Ethereum. Ethereum, you can see on this small time frame, is coiling up, you could say, for a huge move, right? But before we talk about the smaller time frames, let's zoom out a bit and talk about the larger time frames to gain some perspective of where we are, where we're at, etc., etc. So many of you that have been subscribed to the channel for a while know Ethereum is my favorite cryptocurrency. It's the one I'm most bullish on. It's the one I hold the most of. It's the one I focus on the most. On the bigger time frame, we do have this consolidation, this arc forming triangulation, whatever you will call it, A, B, C, D. And you'll notice that this is also part of a textbook bear flag. Okay, so we could, if we go by the technicals alone, we are expecting a move to the downside at some point, down to anywhere really, guys, between $400 and really $250. There's a lot of support in terms of monthly levels at $225. The reason I think we could make it down to that level, well, first of all, if the markets crash later in the year, make no bones about it, crypto will crash as well. In terms of percentage, high to low of the last cycle, it was 94%. If you do the same for this cycle, we've only come down as much as 81, 94% takes you exactly down to that level, that $250 level. So yeah, that could be what happens, but we may see a breakout before then, particularly if Bitcoin rallies and markets rally. So what may that look like? Well, this could be a W. We could break to the upside out of this triangle, and the levels of interest would be as follows. So we've got, let's get rid of this triangle. We've got a weekly, the first target is the top of this channel. Let me get rid of these weekly levels a sec, sorry. The first target takes you to about $1,700. That's a local target. And then we've potentially got up to $2,000 to rally. That could happen quite comfortably. So you've still got this triangle, but we could have a break to the upside, and this could then act as a double top, like an M pattern, before we make our move to the downside. That's what I see, let's say, as most likely. But then we have this smaller parallel channel in here as well. So if I get rid of this triangle and go into the daily chart, you can see that we are range bound in this range. It hasn't been consistent very long. And obviously on the smaller time frame, we have this bull flag for Ethereum. So, you know, a break to the upside, if we do get that break, it's going to take us somewhere in the region, potentially up to 2150, but $2,000, a lot of resistance. I don't think, I mean, you sometimes get these huge liquidation wicks, so it could happen. So set your orders accordingly, but always, particularly next week with the volatility, with what's happening Feb 1st, manage your risk responsibly, guys. If you're going to trade futures derivatives on Bybit or BitGet or wherever you trade, honestly, your leverage should be no more than 5, and you know, for altcoins it shouldn't be more than 3. You have to be very, very careful in this market, even though we are at a sentiment of 55, which is lovely to see. So yeah, be very, very cautious whilst trading. This is something interesting I wanted to show you guys. This is something called Total 3. So it's the total market cap of all cryptocurrencies, excluding Bitcoin and Ethereum. Now look at this. What we're actually seeing is the resistance come into effect right now. And if this level breaks, we're going to see altcoins rally. Altcoins are expected to have a huge pump. And the level they could pump to could actually take you to the next major level of resistance, which is going to be somewhere, I'll tell you in terms of number of percentages, because the market cap doesn't mean too much when you're trading, but it could take us somewhere in the region of a 13 to 15% pump in altcoins against. So this is important to note. It's against Bitcoin and Ethereum. So that could mean 50%, 100%, some of these altcoins, 500% even. It really can be pretty ferocious in terms of how these altcoins rally. So we are expecting an altcoin rally. You can see it in the Bitcoin dominance as well. So we're currently at 44.5% dominance for the Bitcoin price. You can see a range building up here. Let's draw it on the chart. If we get, where would it be? Still looking for these, even though I've been using TradingView for the best part of 5 years, still trying to find where all the tools are. But yeah, we're in this range. We might see Bitcoin rally until the top of this range to about 48, 50%. If that happens, that means Bitcoin is, of course, very dominant, 45%, and that will make way for a huge rally. Likewise, if we see Bitcoin get rejected at this level, 44.5%, that could also mean a huge rally for the altcoins. So let's look at some where the resistance is and the support is right now. So in terms of the weekly chart, the 200-day moving average is beneath us at 41%. So that's not offering real much in the way of confluence there at the moment. I would say that Bitcoin could still rally. If that happens, we may not see the breakout just yet for the altcoins. We may see something that happens like this. Let's have a look together what we might see. You might see something come in. So we've got obviously the support in play as well. We might see the price come down maybe to the bottom before a bigger breakout, which may actually mean we even break out of the bigger range, and that could be huge because you don't really have much in the way of resistance up until this level. So from where we're currently trading, it might be an even bigger move. Let's look at that in terms of percentage. If that were to happen, could take us all the way for a 20% move against Bitcoin and Ethereum. So that's absolutely massive. So watch the Bitcoin dominance chart carefully. If we either start getting rejected at this level, because you can, I mean, okay, let's draw a fib level to see where we are in terms of resistance. So range high, range low, and you can see we are approaching the golden pocket. So there should be some resistance at this level at 45% to 45.9%. So not far away in terms of percentage where we are now, only about a 1.5 to 2.5% move away from in the dominance. And then if we get rejected off that level, it could be time for altcoins to break out, which would be massive. The other interesting chart I want to show you is this chart. It's the Ethereum Bitcoin chart. So this is Ethereum priced in Bitcoin. So at the moment, as you can see, to buy one Ethereum with Bitcoin is 0.068 of a Bitcoin to buy one Ethereum. As you can see, this Ethereum has been getting more and more expensive since the previous bear market. I mean, look how much more expensive it is. 300% more expensive to buy Ethereum in Bitcoin than it was 3 years ago. And I think that's going to go up and up and up. I'm still expecting the Bitcoin price to decrease in value over against the Ethereum price. I mean, look at this. Let me show you some key levels here. For example, let's look at this together. Let's take it to the this bigger time frame chart, this monthly chart, actually weekly. Look at it on the weekly, it's a bit better. Put it into auto. So we have this overall support level, I believe. That's one level. We have another level, which, if I remember this well, comes in the support here. We have this top, or you could say it's a triangulation. And the other thing is, we have this beautiful inverse head and shoulders pattern that's been forming. So we have a shoulder, we have a head, we have another shoulder. And I'm expecting an absolutely monstrous breakout in the value of Ethereum against Bitcoin. How monstrous, you ask? Well, we do the measurement of this move, of this consolidation from the breakout. What we may see in terms of a percentage, how much Ethereum will increase against Bitcoin, we could be looking at over 100% more value in Ethereum than Bitcoin. And the other confluencing factor I'll show you is, look at this. I noticed this the other day. Every time there's been a bear market bottom, and we know we're somewhere around the bear market bottom. We may have not bottomed, but if we haven't, there might be another leg down. Either way, look at this. This was the bear market bottom. Excuse me, guys, I need to cough. Just smash the like button while I'm coughing my lungs out. Right. Yeah, if you would have bought Ethereum with Bitcoin here to the next bull market top, which was 2017, you would have made an enormous amount of Ethereum in Bitcoin. Then we had this bottom here, the bear market, 2018, 2019. Had you have bought Ethereum here with Bitcoin, you would have had a monstrous rally, and you would have earned 380% more Ethereum in your Bitcoin. So a good time, in my opinion, in fact, an excellent time to buy Ethereum with Bitcoin. In fact, on my channel, I did make a video about this. Let me see if I can find it. Let me see the one I made, if you want to watch a video more in detail, because I actually made a trade of selling Bitcoin for Ethereum. Where was it? Selling Bitcoin, maybe. Yeah, this was it. I just sold half my Bitcoin. Here is why. So watch that video if you're interested, and you'll find out why. Well, you know why now, but you can see more of the technicals as to what went into that decision. Right. So what else have we got to look at today? Let's look. We covered the S&P 500. We covered the Ethereum Bitcoin chart. We covered this giveaway, guys, at Marzell Trading. Make sure you are following me on Twitter. The other thing, guys, is check out the links in the video description down below. I have some very, very handy links for all crypto traders. Obviously, bonuses on your trading platforms. Do check out, if you're in the States, guys, I haven't mentioned this on my channel before, do check out Aura. This is not only just a VPN, it is by far the best and most secure VPN. It's also an internet antivirus, and it is an identity protection for you and your family. It's a 14-day free trial using this link. I heavily suggest to get yourself protected with Aura. It is available for only people in the States. Do check that out. Join our Discord. Join our free Telegram trade signals group. You can do all that down below. Guys, if you've been enjoying these live streamings, do join me. I'm going to be doing them daily. I hope you've all smashed the like button by now. And if you would like to share this with anyone, please do that. I think that's all we're going to cover in this stream. And yeah, message me on Twitter, DM me, let me know any suggestions, comments for the show. I'm going to try and make this a daily show and make it really impressive. So any feedback you have, honestly, the more feedback, the better. You can DM me on Twitter at Marzell Trading. On Instagram, you can DM me at Marzell_trading. Thanks so much, guys. And yeah, check out any one of these videos before you go on screen. See you on the next video. Take care, guys. Over and out. See you later.